Good everyone, let's hear from BG Trading. Hope you are well. Today is February 20th, 2023, and I'm going to be analyzing Appen Limited with the SX code is APX. This is a stock that you have chosen for us on our free Facebook community, Buy, Grow, Sell Strategy for share traders. If you are not member yet, make sure you subscribe. The community is free. Anyway, only need to do answer 3 questions. So every once in a while, we post a question about some of the stocks that you believe would be trading at the buying area and want us to analyze. So a couple of people vote for Appen, and then we have decided that also analyzing Appen for the reason that since the revolution of AI, ChatGPT, Appen has been draining a lot of attention from retail investors as one of Australian stock exchange leading AI company. So we want to understand a little bit what Appen does and what's happening with the fundamentals and the technical aspects of this stock. So let's have a look. I just want to remind you, this isn't financial advice. It's just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, which is one of the biggest trading mistakes, and much more. So if you like, please subscribe, and most important, share this video with someone that you believe would be interested. Okay, so let's go straight into our stock analysis. First of all, let's understand a little bit what Appen does on a business context. Appen sits at the intersection of how the world is driving human progress forward by leveraging AI to gain further insight into their data and deliver new customers and employee experience. The impact of AI on everyday lives is changing to an exponential rate. So that's words from company's new CEO. And that's one of the reasons, obviously, people are attracted by Appen in the first place at the moment, despite some successive downgrades in revenue and EBITDA over the last 2 years. Okay, Appen has once been one of the favored Australian retail investors' stock on technology sector. Apple claims that companies that partner with them successfully go from pilot to product 3.4 times faster. Appen has solution for every phase of the AI and ML project lifecycle and partner with Appen to ensure that the company's product is successful delivered at every stage. So basically integrating AI into the company process, various company process. So now Appen does data solution, data preparation, model evaluation, ad evaluation, whole page evaluation, side-by-side evaluation, cataloging, taxonomy development, cataloging, categorization, cataloging data types, new feed content moderation, related search content moderation, geo-local evaluation. So a lot of things on the back end of AI, and then obviously some of the key trusted and clients of Appen are among the big names such as Amazon, Microsoft, Adobe, Pinterest, Bloomberg, Siemens, and all those on screen here. I'm gonna now go through some highlights for Appen. so you can understand a little bit what the majority of the clients working with Appen. So you have a little bit of brief idea that Appen is not just an tech, not just offer a service for technology companies, but also for companies in various type of industries. So in technology companies, automotive companies, healthcare companies, financial companies, and government agencies. So they are the clients, some major clients for Appen. The major issue with Appen is that they had a handful of clients that was generating majority of its revenue back in FY19, FY20, and FY21. And then since COVID came, so and then we had some tightening on economy activities. Some of those companies decide to bring that AI activity, all those activities that we described there, in-house. So basically stopping outsourcing majority of their activity. And that had direct impact on the company's revenue, the EBITDA, and the net, which is the net profit after tax. Appen financial year is a little bit different from other companies. They actually record the full financial year by December 31st, which means you will haven't actually seen FY22 yet. But if you're looking on historic data, there was a very consistent growth in this company. But not going, but FY22 won't have the same. Won't continues on this scale. Obviously, it's going to come down, and the company will declare some losses. We don't know exactly what it is, but the information we have in this analysis for first half of FY22. The first half, the total revenue was $182.9 million, a decline of 7%. The problem with this company now is that they neither gave us investors any guidance or a firm position on what would be the revenue, what would be the estimate EBITDA for the full year, for the second half. They only indicated the majority of the revenue in the second half would come on the later months, which would be November, December, as a result of Christmas marketing and sales campaign by some of the clients. So we really are in a blind position here. We don't know exactly what's happening behind the scenes, no firm guidance, and a lot of uncertainty. Now, I wanted to very shortly look into the share price formation. But just first, if you're looking at the total revenue of $182 million, we'll probably be looking at around $300 million, which brings the company revenue back on between FY 2018, FY 2019, unless they beat the expectation. Nevertheless, we already have seen that on the share price, a drop from incredibly $42 a share, now trading at $2.65, 70 sort of mark, which is about 95%, 94% crash on the share price as a result of this uncertainty in the market. So some of the highlights here is the company has been increasing revenue from global customers, enterprise, government, China, and Quadrant. That was the big promise for the first half of FY22, and potentially we will see some further uplift on the second half of FY22, which the company will release the results on 27th of February. So it's gotta stay tuned if you are holding, if you're looking at buying this stock. There will be some big moves ahead could be potentially to the downside or to the upside, depending on the position. I just wanted to state the risks here. So obviously, with decline on revenue, we also have a 66% decline on underlying EBITDA, and margins impacted by lower revenue and higher cost base. That's no good, obviously, but that has already been reflected on the share price. That's the main thing here. The market has been priced in on the stock price already, so that 94% fall. The share price looks attractive, but we need to have some firm and good positive results. I'm gonna show you another few interesting points here. Revenue in China grew 141% year on year with new projects and new logo wins, also by counting in China leading technology mobile AV companies among existing customers. Unfortunately, this is just a small portion of the overall revenue of the company, but we could see further growth in China business. Apple also has declared to have several new customers wins in Japan and Korea during first half. That means, by logic, we maybe see a revenue coming in the second half as a result of those acquisitions, those customers acquisitions. Also, something that I want to highlight here is the cash balance of $42 million in the first half, lower than the year before, due to the upfront payment of $25.3 million in September 2021 for Quadrant, but it's still at the low end of what we call reasonable health balance sheet. As per the industry benchmark, technology normally sits between 20 to 30%, and Appen is there about 24%, which is pretty decent, I would say. So we want to see if that cash balance stays a similar level in the second half and in the full year. So hopefully the company presents us with a compelling report. Yeah, because the reports hasn't been very interesting, very exciting to read anyway. So, why the stock price has fallen so much? Obviously, net of a loss of $3.8 million compared to profit of 12.5 underlying profits after tax in the prior corresponding year. So from profit to a big loss. Statutory net loss after tax was $9.4 million and was impacted by high amortization expense for product development. And the company guidance is not present at all in the first half, which is one of the, for me, this makes a very uncertainty opportunity to invest. So people don't like uncertainty. That's the problem. Okay, so now let's jump on the technical part of the stock. So the chart formation for Appen, if you see, as I mentioned before, is down about 74% on the last 52 years. Say if you have bought Appen a year ago, you would be losing 74% already. Okay, followed by another 70+% on the year before. So basically, if you have held Appen for the last 2 years, you'll be losing about 94% of your investment. That's pretty bad investment, but that potentially could bring some opportunity here. What I wanted to explore is every time the Appen appears to be sort of bouncing back, and you gotta be careful when that happens, because now we can see here over the last 5 months, since October, that Appen has reached, so since November 11, that has reached lowest level of $2.30. We have seen sort of a bullish intersection here, and then also a bearish intersection. Okay, so basically, bullish intersection, if you haven't done our course, means the EMA 9 crossing the red line, the SMA 40. Okay, giving some potential buying opportunity. Okay, but then was soon braked with this bearish intersection, and then we had another bullish intersection, level one again, and the stock haven't actually crossed back. Which brings to also looking these very high volumes on the upside here, which show that not just for the reason that is a volume on the upside, but show that there's a lot more activity coming up in the stock. So trading activity. So and then part of this trading activity is, first of all, because it appears from the technical perspective that the stock has bottomed out now, has bottomed down on this 230 level to $3. And also with the high volume and hype on AI, appears that a lot of people are looking at this company right now as we speak. So we could have a very good rally if the second half of FY22 comes up in line or better than expected. Okay, part of the potential rally could just happen if it's in line with the expected, but for the fact that as soon as the company releases the result, the market becomes less uncertainty for the next 6 or 12 months, depending on what's happening on the report, the form that the company displayed the report. At the moment, it is unfortunately 50-50 chance that the stock could do really well in the next few months. But obviously, we have also the fact, the macroeconomics, and this company has not just sold off because the poor performance, but also in combination to successive hikes of interest rates in US, and if inflation is under control, this is a growth stock. This is a company that is still does a lot of business. It just has been shrinked due to the headwinds in the macroeconomics. But we could see if AI revolution really stays for good, we could see a lot more interest into the services that Appen provides to be customers, and we could see revenue coming in, potentially a positive EBITDA again. So if I would ever try buying a stock, would it be when it's trading at what we call technically discounted price? And as you can see here, this pink line shows the medium-term moving average. It shows whether the stock is trading at a lower average or on the long term, or at a higher levels than the average. And I normally avoid buying when the stock's trading above, like this part here. Obviously, that would be overbought, but you buy around here. But you still got to be careful, because even it's trading under here, you could have massive crash. So, which means if buying, you must have a stop loss. Stop loss is a must in this case, because it could fall from $2.70 to, who knows, 50 cents or something, and you have another 80% crash on the stock price. So we don't want that to happen. So always make sure there's a stop loss in place. Keep in mind, if you're going to buy this stock now that is trading at a long-term technically discounted price, in the short term, it's trading at what we call technically fair price, okay? So ideally on the short term, if you gotta buy at technically fair price, you gotta have stop loss somehow under this red line here to protect from a potential further crash. And if the report isn't good, doesn't entice investors, market is very nasty, market doesn't forgive, and then we will see another leg down, a massive leg down. But if the report is better than expected, we might see a big rally. And I've seen that some big rallies here already happening as a speculation of AI. So keep eye on this stock. We recently tried trade this stock, but we had to take a stop loss, unfortunately. But then obviously we bought a little bit above, just as a speculation of AI. Company released some material decline, and then we had to cut our position right quickly to avoid any further losses. But now, is speculation. Keep in mind, any purchase at the moment will be speculating that the FY22 results will be positive. Okay, this is a speculative stock at the moment. Okay, so hope the analysis has helped you to have a brief idea of Appen. Again, if I was ever buying Appen, it would be when it's trading at current levels, not when it's trading above this pink line, but stop loss all the time. Guys, thank you very much. I'm also going to go through each of the stocks that you have chosen for us in our Facebook community. So if you stay at the end, rest assured the next video will be about the stocks that we have been suggested to analyze. Have a great week, guys. See you in the next video. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.